Welcome everybody who is on today's call, and certainly appreciate your interest in our bank, Bank of the West. I'm the current president and CEO of Bank of the West, and today we're going to cover our third quarter results for 2017, our bank strategy for the fourth quarter of this year and going into the future, and then the advantages that we see heading into 2018 and the near term beyond that. So first I'd like to cover our quarter end results for the third quarter. And I know that most of you have our full set of financials to review. However, I wanted to highlight three items in particular. First off, our earnings, certainly something that everybody would want to chat about. We did admittedly miss our target for the quarter, primarily due to weakening in our net interest margin, which we'll talk about a little bit later, and how we plan on improving that margin and getting that issue fixed. Also, our non-accrual and past due loans are continuing to improve, which shows that we've got definitely have strong asset quality here at Bank of the West. And then third thing I wanted to highlight is that we are shortening the duration of our loan portfolio, which does give us a great opportunity to reprice loans here in the coming 12 months. So let's look at our first three quarters of 2017. I've got our peer group listed next, and then you can see where we were going back a full year through three quarters of 2016. And there you can see our net interest margin, not where we want it to be. We are down slightly from where we were last year. We want to see that net interest income number improving. We did improve our interest income number. I can see that top line. We picked up about 6 basis points in the last year, up to 3.16 in interest income. So we're happy about that, and we're certainly expecting to continue that trend. Interest expense, however, did gain over the last year fairly significantly, and we're certainly above the peer group there. That's going to be one of our management team's focus is to get that number down. And you can see where the peer group is through three quarters of this year at 3.2 for a net interest income. We want to get close to and eventually beat that number, and certainly think it's achievable given our strategy, which we'll discuss in a moment. And there you can see the strong real estate portfolio. That portfolio is important to us. Real estate makes up about 45% of our loan balance and our balance sheet. So seeing the non-accrual numbers decreasing year over year, seeing the number of loans that are past due decreasing year over year are a good sign, and that portfolio is indicative of all of our loans in total, and certainly points to high asset quality that we're very proud of here at Bank of the West. And then finally our loan portfolio duration. And you can see that we've got a decreasing number of loans or assets and securities that are going to be maturing past 1 year and then past 3 years from now. And really what that tells us is we're going to have about 46% of our loans and securities maturing in the next 12 months. That's going to be a great opportunity for us to reprice them. We assume that they'll be repriced at higher rates given the current monetary policy here in the U.S. and increasing rates across most maturities. So we should be able to leverage that opportunity and see further gains in our interest income number, certainly in the next 12 months, but I would also expect over the next 36 months. Going forward, certainly improving that net interest margin. We're going to do that two ways. One, attracting additional core deposits. Core deposits, are from our more local customers. They're going to be more stable, and most importantly to us, they're cheaper than the broker deposits. Some of the broker deposits that we currently have as liabilities in our balance sheet. And then also, in addition to that, repricing our loan portfolio, as I mentioned, in a rising rate environment, we're going to have an opportunity to reprice a number of our assets that's going to increase our spread, which will ultimately result in increased earnings. We also want to focus on cross-selling opportunities. We're a very diversified and integrated financial services company, and I'm going to challenge my retail team on our branch side to make sure that all of our customers know about the deposit loan products we have, but also cross-sell our business capabilities and our wealth management team. If we can get multiple customers on multiple products, that's going to help deepen our existing relationships and really help take advantage of the economies of scope we have at Bank of the West. Then finally, growth into new markets. We've got some opportunities heading east from our home base in San Francisco. We've got some business banking, commercial banking outlets in Illinois, Ohio, and Atlanta. We're going to pick one or maybe two of those markets and try to grow our retail, our branch presence there. We've got a good footprint with some business customers there, and it's a good opportunity to grow the bank. I'd like to conclude today's call with this. As investors, you should have confidence in our future for a number of reasons. Bank of the West has award-winning customer service. We've got great online and mobile banking capabilities, and we need to use both of those to our advantage to drive our strategy, to attract higher core deposits, and to grow the bank. We're also very well capitalized. We meet all well-capitalized standards as far as regulatory ratios that are required of us. We passed our most recent stress test performed by the Federal Reserve in June of this past year, and we are ready and capitalized to handle the Basel III requirements that will be coming in and being fully implemented at the end of 2018, where we've already prepared for that and are considered well capitalized based on those expectations. And then finally, the economic conditions are excellent for the near future. The U.S. economy is roaring, is doing well. The recently passed tax cut legislation is certainly going to benefit us on the expense side. And then finally, we're entering a rising rate environment, and given where we're positioned with our loan portfolio, we should certainly be able to take advantage of that and increase our net interest income. So thank you for joining us today, and we look forward to a great final quarter to 2017. Thank you.